Not all mortgage brokers are the same. The type of broker you choose to be will absolutely shape the kind of clients you can help and the income you're going to make. So in this lesson, we're going to unpack the three main types of mortgage brokers. Those are the tied, multi-tied, and whole of market, and what each one actually means for your career. So the first one is a tied broker, and they only work with one lender. You'll mostly find these in the banks and building societies. So if you're sat in Nationwide, you can only really recommend Nationwide products in most cases. Now, the upside to this is it's very structured and completely straightforward. The downside, though, is you can only ever offer one set of products. So if the client doesn't fit, you actually can't help them. And the second type of broker is multi-tied brokers. Now, multi-tied brokers have a panel of lenders, typically going to be between 15 to 20, sometimes more, and this model is common in corporate firms like Connells and Countrywide. Now with this, you do have more choice than a tied broker, but you don't have access to the entire market. The pro to this is more variety of clients and more scope of business, and often job security in an employed role. The con for this, though, is you're still restricted. If that lender is not on panel, you can't recommend them, even if they are a perfect fit for the client's situation. Now, finally, we have brokers who are representative of whole of market. This doesn't mean literally every lender in existence. Some lenders don't deal with brokers at all, but it does mean you have access to every lender available through intermediary channels. Now, the upside to this is you can help on the widest range of clients and position yourself as truly independent. The downside is you're often self-employed and you need to handle more of the business side yourself. So let's talk about why this matters. If you are brand new and you're looking for stability, tied or multi-tied roles can give you the structure and training. If you want independence and maximum choice, whole of market is where you'll end up going. But remember, you don't have to pick your forever model. Many advisors start in tied or multi-tied, and then they learn their trade and they move to whole of market once they're confident. So here's the task for this lesson. Grab yourself a blank bit of paper or the book that you're using and draw 3 columns in it. Write tied, multi-tied, and whole of market. Under each one, write one pro and one con that stood out to you. Then circle which model feels most aligned to the type of advisor you'd like to become in the long run. In our next session, we're going to shift gears and start looking at the bigger picture, how the property world works, because remember, you're not just in finance, you're in the whole property service industry. So I'll see you in that one next.